We see the Fed left interest rates unchanged as expected, but the labour market and inflation at the top of the agenda.
Yes, historically, technically the Fed should be looking primarily at inflation. If inflation fears started coming into play, they should be looking to actually raise interest rates. But if you look at it historically, you'll find that most of the times that they've actually raised interest rates have only been when they've seen a rising job market. And currently, even though we have seen a bit of strength coming to the job market, it's certainly not strong enough to advocate for a raise in interest rates just yet.
We've also got inflation coming out a bit later on today. What are your expectations there, the US inflation?
Well, they would have been helped by the stronger dollar. The Greek weakness would have weakened the euro and made the dollar stronger during the period, so they would have been helped a bit by the stronger dollar. But I do think that you are going to see a bit of inflation coming through from the production side. If you look at the iron ore prices in recent negotiations, you look at oil prices right now hitting resistance at about $82, $83 a barrel. There seems to be some kind of movement in those commodity prices, and that might just feed into inflation in the near future.
If we look at the JSE, closed in positive territory yesterday, what's the move likely going to be like today?
Oh, we're probably going to be positive again today. The Dow closed a little higher than where we were when we closed, or where they were when we closed. So we're probably going to have a movement higher. Also, we have closeout tomorrow, so we're also going to have that positive pressure coming through.
All right, and we've got Cashbuild, which reported results yesterday. JSE earnings season is in full swing. Interim results there. Half-year profits increased, revenue increased by 9%, while profit decreased by 26%. What did you make of the numbers?
Yes, I'm not a big fan of the construction sector just at the moment. I think there's been a lot of pressure there. I don't think that we're going to see a huge return to the boom market we saw a few years ago. I do still think the consumers, especially now if you think about something like the electricity price increase as well, it's also going to affect their discretionary income, their ability to save, to build houses, etc. So I'm not a big fan of them at the moment.
All right, you've got building plans passed. Elliot also released interim results yesterday. They said that they saw a 30% to 50% decrease in building plans passed. Could we see this trend improving? Oh yes, we should see a certain trend improvement. We have a growing population, so there should be some pressure for increasing in terms of number of houses being built, etc., just because of the fact there's more people in the country and they can't keep on sharing bedrooms or whatever. But we are going to see maybe a downscaling in terms of the size of the projects being built, etc. And another one coming out today, which is Aveng. They're expecting headline earnings per share to come in between 30 and 35%. What are you looking at there? Yes, Aveng has been one of the interesting shares to look at. If you look at the ratio of Aveng to Murray & Roberts, for instance, over the last few months, it's really outperformed Murray & Roberts quite dramatically. Just a few months ago, it was maybe $10 lower than Murray & Roberts, and just recently it's just been at a high price than Murray & Roberts. Yes, Murray & Roberts has been partially affected by the Dubai situation. They had that exposure to Dubai that was quite large, but still it's quite interesting to notice the fact that Aveng has been outperforming Murray & Roberts. The market's probably expecting quite good results out of the company today. Right. Any other stocks that you're looking at in that construction sector? Not really. I'm not a big fan of it at the moment. I do think people looking at the next half of the year, thinking after 2010 we're going to have a huge infrastructure spend coming from the government, etc. But if you look at the actual budget deficit we're in at the moment, look at the problem the government's having at borrowing money. Okay, it affects mostly Eskom at the moment, and it talks about the fact that borrowing by emerging economies is going to be more expensive going into the future. I don't see it easy for government to finance massive infrastructure development into the future. You might have a bit of delay on those huge expectations that we were looking at. All right, and retail sales, as we know, coming out later on today as well. What are your expectations for this? I do think the South African consumer is recovering to a certain extent. They were hammered last year, and there was a huge drop-off in major purchases, for instance, purchases of white goods, etc., like fridges and stoves that you could put off for a couple of years. And so there has to be some kind of movement in that direction. However, I don't think that we are in a situation right now, especially considering the balance sheet, especially considering, like I mentioned, the electricity price increase is going to be quite an important thing here, because it's going to take a lot of discretionary income out of the market. It's also going to be quite negative going into the future. So I do see a bottoming out of the market, maybe a slight improvement, but I'm not very keen on the higher end retailers going into the future.